big $1,000,000 question. Do you think the 10,600, 10,700 zone is a buy zone? Has the market made some kind of bottom, you reckon?
See, 10,600 is a distant possibility. I don't think it is going to happen. But yes, as it stands today, the market is still fairly valued and it is rearing more on the undervaluation side. If you look at some of our proprietary frameworks, what it does tell me is the long-term average for India is 52%, which is the attribution for long-term growth for India is 52% on an average. Today we stand at 45%. So that makes India quite exciting to invest, and across the board. It's just not financials here or something. It's across the board. There could be stocks to pick up.
Okay. Well, good morning, Ravi. I want you to parse the announcements that were made yesterday. As a stock investor, will you look at any specific stock or stocks? All those FDI announcements.
FDI, wherever there is 100% FDI automatic route, I think we had this Dixon and Amber, which is a good bet. But for the rest, I would rather want to wait because, you know, we need to first see whether the money will come in or not. Announcement is one.
And also the detailed press note.
Yeah. I haven't read it in detail, but wherever there is a 100% FDI, I think where there is a dearth of capital, I think they're coming in is a definite positive. And coming at the right time, actually. So somewhere somebody has to invest in India. And if it happens, the quicker the better.
Okay. Ravi, hi, good morning. What are the top 2 or 3 stocks that you recommend long-term investors buy now?
If you look at the utility space, I think Reliance could be a good bet now. We have a target price of 1,700 today. After the Amco deal, you know, the debt reducing in the next couple of years, making it debt-free, plus refining to do well, especially the diesel after the Marpol convention comes in next year. Petrochemicals may not do well because of demand and supply conditions and because of the trade wars happening. But the big surprise around the corner would be Geo. Maybe even retail. But so 1,700 is our target price for among the banks, especially if you see after those announcements which were made on Friday. And potentially what could happen to real estate once the announcements are done. 1 or 2 plays in the banking sector could be very attractive.
Okay.
For example, ICICI Bank could be a good bet. HDFC Bank, for some time we had a reduced rating on that stock because the stock price had gone far beyond a target price. Now that the price has settled a bit lower, HDFC Bank also is a good bet.
Any thoughts on this one, Ravi?
Yeah, the coal prices are falling, e-auction prices are coming down, so obviously it's a pain for the company.
Okay, we
so
were having
that
discussion on banks. So
yeah.
I wanted your thoughts in particular on RBL Bank, the kind of decline that we have seen, and IndusInd Bank as well.
Yeah, there are these small issues which is giving us some concern about the rise in credit cost. So we're trying to play it safe and only look at those banks where we think, you know, if you put it in a broader context, where we like those banks where the NIM margins are fairly stable, credit cost is low. So whenever the balance sheet size increases, so the growth gets reflected in PAT as well. But if you see the announcement which was made on Friday, which is potentially going to come about the real estate sector maybe this week or next week, I think all that which the finance minister announced on Friday benefits the banking sector substantially. One is the FPI flows itself in terms of the surcharge being withdrawn. Most of these banks have more than 50% FPI shareholding. So if that were to happen, then that is one possibility. Second is that, you know, 75% payment, you know, which actually is a lot of money in the hands of some of these fleet operators. You know, fleet operators plus money coming back in the form of cash could also be of some benefit. Bank recap is another benefit. So net and consumption obviously is going to improve because of all of this.
Because of bank recap, you're buying any of the stock?
Not PSUs as of now. We need to see as to how this is going to translate into credit growth, because out of that 70,000 crores, my sense about 5 trillion
So who will you buy? You will buy some
PSUs
borrower,
now,
I assume.
Not PSUs as of now.
Yes, but
but I will still concentrate on private banks for now. Maybe in the NBFC space, some of them which take a lot of these bank loans, there could be some benefit if the real estate, the announcements are positive for the sector with that refinancing happening. One or two names in the NBFC space I would like to pick up. Maybe the asset financers.
Are you already, I mean, if Bajaj
We like Cholamandalam because of the diversity they have in their portfolio. We will probably start to look at asset financers like Mahindra and Mahindra Finance and maybe Shriram, because they are now, they have corrected pretty well as it. So maybe there could be some benefit there as well.
I wanted your thoughts on Maruti, because yesterday there was an announcement about Toyota and Suzuki entering into an agreement. So Toyota will now buy almost 5% in Suzuki, and a lot of people believe that this could be a precursor to Toyota acquiring Suzuki eventually. If that happens, the stock actually fell in the last hour of trade. You know, Maruti is anyway beset with problems of its own. You think this could be a long-term hurdle as well?
Maybe yes. But if you look at Maruti in isolation, keeping this particular deal aside, a marquee company, they have already launched one product today, they'll potentially launch a new product, they'll do a new launch sometime later. With all this which the finance minister announced, with money coming back, refunds coming back in the form of GST, there could be some fillip to growth there. But what it does for you is that the huge negative we had on the sector, particularly in Maruti, in terms of a 15% drop in earnings, that could maybe reduce a bit, because last month the volume growth was 30% down. This month we're expecting it to go down by 30%. So as a consequence, the growth is going to be substantially low for this year particularly. But in the long term, if you really want to look at a stock in the auto space, one can't avoid Maruti.
So would you buy it now, or you think you'll get better levels over the next couple of months?
I'll wait for some time.
You wait.
Do you track Trent?
We don't as of now, but we will do very soon.
Okay. No, they posted decent numbers in the first quarter.
Surprising,
So,
yeah.
Okay.
With all that headwinds you're having because of consumer sentiment.
For consumption.
Yeah.
Actually, I was going to ask you some more consumption stocks therefore. Even Nestle, I mean, for all the consumption slowdown, Britannia saying they could not sell 5 rupee packs. Maggi, the 10 rupee Maggi seems to be selling well because Nestle reported a 13% rise in volume. Now it is part of the Nifty very soon. So any thoughts on that?
Yeah. So if you were to put this FMCG in a 2x2 grid, rural, urban, mass products and premiumization. So if you put Nestle, it comes into premiumization and urban. Yeah. So that's the reason why they've been doing well. Okay. And we expect them to do well. So we have a buy on that stock. Okay. Britannia, I think they're getting to do better than Parle. And the cookies are doing well, the Good Day is doing well, their distribution reach is improving, their stock is pretty attractive today. Again, they're also getting more into the premium segment. So we also have a buy on Britannia.
Okay. What about a stock like PVR, where you had some negative news, perceived negative, and after that it's just moved on?
Between the multiplex space, we like Inox more than PVR. For the simple reason, the content pipeline is pretty huge now. A lot of movies yet to be released. The F&B segment is also expected to give them a lot of money. So between the two of them, we like Inox.
Okay. And sorry.
No, I in fact wanted to ask you about, we were talking about consumption, etc. Yesterday we did speak to the management of V-Mart Retail, and they did tell us about how consumer sentiment is still quite weak, especially in some of the tier 2, tier 3 cities. V-Mart, etc. I mean, these are stocks that have given great returns in the past. At what point do they become buys again?
So if you see V-Mart in particular, they are into tier 2 and tier 3 cities, mostly rural focused. Is the money coming back in the rural? The answer is still a time away. For example, what's happening? Wage growth is not happening. Food prices have gone down. The place vacated by NBFCs have not been taken over by banks. Now, they had this problem of warehouse receipts where, they turned out to be NPS. So banks are wary of lending there as well. The farm income, which was supposed to be that 6,000 rupees, which was supposed to be given, just about 4,000 rupees has been transferred. That too for about 5.5 crores of people, so which is about 20,000 crores, as against an 87,000 crores, which is to be. So all this is putting the rural economy in distress. He says, that I heard him talk today, the footfalls have introduced, but they've been talking about festival season and getting back growth for them. I doubt that quite much because today nobody buys during festival seasons. You know, when there's a discount sale, you go and pick up what you want. You pick up loads and loads, actually. It's not one shirt there, two shirt there. For the whole year you pick up. Plus, online, people pick up like crazy. Then the festival factor is pretty dominant in the north. But moving down into south, west, east, I don't think that could be a big driver of growth. So that is where my small concern is. So if the rural picks up, my sense that these stocks should start to do well.
Okay. Ravi, we didn't discuss pharma. And now, you know, SEBI has cleared the air, at least on the whistleblower issue of you know, tax accounting and stuff like that over Sun Pharma. You like anything?
So I will broadly put them into two buckets. Pharma companies which have an exposure to the US and pharma companies which are totally India focused. If you look at US, what's happening is the stringency in FDA rules have been waning a bit. Competition intensity is coming down. Even the pricing pressures have been decreasing. But what is also happening in the US is some of these large players are vacating the space. As a consequence, what is happening is some of these smaller players are trying to get their foothold in the US. So for example, you take Torrent Pharma. So that is what they are doing. India business for some of them is pretty good, though the growths have come down as against 12 to 14% then. It's now come down to 9 to 10% types, largely because of no new product launches, government regulations, stuff like that. But those who have chronic products which cater to chronic diseases as against acute, they should do well. So India is a good story. So we said Torrent. And if you were to look at valuation attraction, it is Aurobindo, though the fundamentals are not going anywhere.
Okay, so
we like
Torrent
both
and Aurobindo. I also want your thoughts on paint companies, because yesterday we were speaking to Berger Paints, and very interesting takeaway from that. He said that despite a slowdown across sectors, paints is doing well because people are now repainting their homes since they perhaps can't afford to buy a new one. Would you buy either Berger, Asian or Kansai?
See, if the first question you asked me, which are the two big good stocks you like, I should have actually said Asian Paints, you know, though we started with Reliance. See, what's happening to paints, the revenue is coming from multiple sources. Earlier, just it was about paints. Today, what they also do is the putty, you know. I remember having this conversation with you people a couple of months back.
They make the putty as well.
That revenue is a big number for them.
What is putty?
See, they have to plug the holes before the repainting is done, right?
Okay. No, yeah.
So that somebody else does it for them. And now these people go and tell clients that, look, if you do it for somebody else, we can't assure you quality painting. So you'll get it done through us. So that plus waterproofing. So the revenue sources have multiplied for them. And on top of that, the raw material costs has come down substantially. So as a consequence, paint, they did quite well last quarter. So I think that's a good sector to be. But if I were to choose between both of them, I would choose Asian Paints.
Okay. All right. The Asian Paints, of course, also has had a good ride. I wanted to ask you finally about IT. Is that still the fallback sector for regular returns?
So if you look at the different sectors to which they cater to, for example, BFSI, that's in a bit of a pain now. Reason being, most asset management companies in the US are scaling down businesses, are going the other route rather than having this active investment. Then the trading of investment banks is also coming down. So BFSI is a bit of a problem. So those companies which are focused on BFSI, they could have a bit of a problem. Auto is doing well because of the electric vehicles. Then communication is doing well because of 5G. So healthcare is still in a limbo. Utilities is doing well. Manufacturing is a concern. Oil and gas is doing well. So if you look at these sectors, so those which are more into communication, those which are more into auto, those which are more into retail should actually do well. Infosys, not so excited now. TCS, better than Infosys for us because the pipeline is good. But amongst the many of them, we like HCL Tech.
Okay. Also, in the road sector, you know, one startling revelation was, I mean, over the last few days is how NHAI's debt has been piling up and how the road projects could slow down because of lack of funding, etc. Any of the road operators that you've liked in the past, but now you're a bit cautious there?
We like PNC Infra. We've always had a good view on that stock. But like you rightly said, it's leave alone this problem of NHAI. I don't think anything substantial is going to happen in the road sector, given the budget constraints we have this time. Fiscal constraints of 3.3% means it gives you very little money to invest. Even the RBI transfer of money, which happened the other day, it probably could help the government to have money to meet up those announcements which they did on Friday. Yeah. So not too much of a money available to get into, you know, substantial infra spending this year. So my sense is, you know, all round there's going to be a bit of a concern about how this is going to transpire.